We are back for another exciting week here in the markets. We have concern about government shutdown and credit downgrade. We have more information about the health of the consumer. Guess what? Not very healthy. We know more about student loan debts and payments coming there and how people are preparing for it. So, a lot to discuss. We're going to hit on all of that and more today on Money Never Sleeps. Welcome back, everybody. Hope you had a great weekend. Before we get going today, do us a favor, hit that like button, subscribe to the channel if you haven't yet. Nothing Kevin or I say is financial advice. We're not financial advisors, a couple of guys who love following the markets. So please do your own research before executing any buys or sells. Kevin, there's a lot of news today, especially on a Monday. It's making up for the fact there's no real economic data yet, but we have plenty of that coming later in the week. As we begin this crucial week to end Q3, what are you looking at? What has your attention?
Yeah, I think the major things that have my attention are obviously the dollar. That was something that we were keeping an eye on last week. Broke through our level. We'll take a look at that in a little bit, but that's going to be a huge player when it comes to equities. Kind of shows you where people's confidence in the market maybe sits more than in other positions. The Evergrande news too, the fact that they can't issue more debt, that's pretty fucking massive, especially with how we saw it dropped, I think 21% yesterday. So there's a huge gap there. Maybe a squeeze is possible. And then obviously just keeping an eye on everything regarding this, government shutdown. Yeah, it's coming at a pretty crucial time. It's right at the end of Q3 will end, and then we'll go into Q4 with the government shutdown potentially. And how does this affect the Fed with all the data that's coming out? Are they going to be able to react on in a timely manner? Who knows? But it's definitely not a good sign, and it's definitely not good for the United States credit. We can get into that in a bit too.
Yep, let's do that. We will first quickly go through what we're looking at from a economic report standpoint this week. Nothing today. Tomorrow we get new home sales and home price index. So more kind of breadcrumbs into what is the shelter numbers going to look like in inflation. That has been a real big sticking point and has led to the core inflation, the Fed's preferred gauge, to be elevated in recent months. We'll also hear from Fed Governor Bowman that day. On Wednesday, we get some durable goods orders, more health of the consumer and what's being impacted there. Thursday, things start to heat up a little bit. Initial jobless claims, Q2 GDP final number ahead of the start of Q4. And then our boy Jay Powell is speaking in the afternoon. And then Friday is the big one. We get personal income, personal spending, PCE, core PCE. So the Fed's potential final look at some economic data before a possible government shutdown, which, according to Moody's today, and not surprisingly, could lead to another credit downgrade, as if we didn't have enough shit piling up already. So that's going to be news story number one we cover. This government shutdown, which, Matt Gaetz, I don't give a shit about your political affiliation. Anybody watching, vote for either party, whatever makes you happy. Guy's a moron. And he's just like, yeah, I think we might need to shut it down for a few days. That seems like a good idea. It's like, are you brain dead? What are we talking about here? That is just the last thing we need to be discussing at this point. Get this shit figured out. Get a fucking adult in the room, because a government shutdown, even for a few days, is going to be bad. It's going to cost a lot of money, and it's going to lead to a potential credit rating downgrade, which is going to, once again, hit the markets hard like we've seen in the past.
Yeah, honestly, again, I said this a few days ago. Everything's out of our control at this point, and I think some people in government definitely know that it's like, hey, let's just let this shit go at this point. I don't know if there's much more we could do. Maybe we can just get out of our positions, but for the most part, it seems like they are leaning towards the shutdown. I honestly think that they will shut down, whether it's for a few days, what have you. But that's not great. Again, we saw that the credit downgrade happened back from was it Fitch downgraded them originally, the United States. They were the first ones to do it. I wouldn't be surprised if Moody's does it too. Again, what does that mean? That just means that as interest rates continue to go higher, it makes it harder for the United States to borrow debt. And that's another sign of credit tightening, right? So the thing that we've been talking about with credit tightening globally, and then how liquidity is drying up everywhere, This is kind of lining up with the fact that money is going to be harder to find, and that's kind of my thesis and reasoning for like why I think the dollar is taking off here and equities are just kind of in this few day drop. I mean, if you wouldn't know this, but the Dow's dropped over 1,000 points in the past few days, right? I mean, it was up at 34.7. Now it's at like 33.7 or something like that. So yeah, I don't know where the money's coming from. I can just tell you where it's going, and it's out of the system. So seeing this shutdown ain't going to be pretty, in my opinion.
Yeah, Dow is down about 3% in the last 2 weeks. Let's talk about real quick. Let's update on some strikes because we got strikes going on across the country. The Screen Actors and Writers strike is looking like it could be coming to an end. People are saying this is bullish, and that's why Netflix is up. To me, that is a quick little exit pump you could take if you're still holding positions there. I think that is just like that's more noise than anything else. We have the auto workers strike still going on. Biden going to be heading out to one of the plants to be on the picket line with them for a photo op. So, trying to work that working class vote right there. And, other than that, I'm not seeing too much. Anything you want to touch on there? And then we have two things to discuss that I believe are really important and are going to impact the markets in a big way in the months ahead.
Definitely. No, I think that's pretty much it in my end. There's not too much. Are you going to talk about student debt right now?
Yep.
We're
going to talk.
Yeah.
We're going to talk about savings rates and student debt. So I'm going to start with the savings one. I saw this story come out a few hours ago. This was the latest from the Federal Reserve study of household finances. Bank deposits and other liquid assets are lower back in June than they were in March of 2020. And that's across all financial ranges, lower class, middle class, upper class. Upper class is still up there, sorry, but they're all down from the peak. Okay, so we saw it peak in 2021 when the bull market was raging. Everyone is down since then. Cash savings are down 8% for the bottom 40% of households from the peak, and that is below pre-pandemic levels. And it just happened to the middle class as well, where they've seen their savings below pre-pandemic levels, and that combined with student loans means that we are in for some trouble. If you look at what people are spending their money on, once again, it is these higher everyday living costs. And this is going to hurt the stock market. It's going to hurt the crypto market. If we move into student loans quickly, according to a survey from Jefferies that came out today, 90% of Americans who have student loan debt currently are, quote, at least somewhat concerned about being able to meet monthly expenses. 90%. And there are millions of Americans with student loans, many millions. The areas most likely to be affected by that, according to their study, were apparel, footwear, accessories, restaurants, and big ticket items. Don't know what exactly that means, but like we've been saying for a while, when this was going to be happening, when student loan payments are going to be back in a week, like October 1st, it's spread out for various people, but it's going to be back, and people are going to have to start cutting back on these things. And we need to take a look at what areas of the market we could, try to take advantage of from this standpoint, whether it's shorting some of these companies that are going to get hit the hardest. But man, it is a bad setup between people having less savings on hand than they did before the pandemic, and student loans starting, and most people can't afford, to just live with those student loans back. This was a bear market rally that we've been seeing. Okay. For the people who are like, oh, we're back in a full on bullshit, we are.
Yeah.
And this is the end. Like, this is going to be part of the end of the rally. Like, I know everyone's saying that like 2024, we got the halving and the bull market's going to start back up and it's going to go into 2025. Maybe, or maybe this is like the last gasp before shit turns sideways in a hurry. And data like this and seeing how bad a situation people are in, it fucking sucks. And it means that, is institutional money going to save us right now? I don't know.
No. Again, I think they they did what you just said about Netflix, pumping. They took advantage of every rally on the way up, right? They think they sold the top, and now we're seeing, retail holding most of these bags. But it's going to get worse for a lot of consumers, people that aren't in the market, just people in general. I mean, I was telling you before the show, it's already getting harder in some aspects, like just normal things have gone up so much in terms of taxes, added expenses. No one can survive that way. People are going to have to sacrifice, and that's just it's the nature of the situation. I don't see, and again, this is where I don't see fucking money coming in from anywhere. I don't know where the money's going to come from. Do I think institutions going to put it? Start dishing out cash? No, I don't, because if we look back to 2008, post collapse, credit tightened so much that it was hard to get a loan. Yeah, rates were extremely low. You could have bought a house at a really good time, but where were you able to get a loan from? It was so hard to, because they had just lent out loans so much beforehand, which pretty much led to the collapse, that we're not going to see it now too. So I don't know where money's going to come from. I think that we're seeing liquidity absolutely dry up. Um, is it possible that institutions come into the situation and push it up a little bit? Maybe. I just don't. I don't believe that narrative whatsoever. And again, I'm going to go into the halving here too, real quick. Fuck the halving. There's the halving from last cycle to this cycle is so different. There's only about 2 million Bitcoin that are still ready to be mined here. The difference between that and where it was, for the past two halvings prior to this, there's a huge difference in the amount of supply that was available, right? It was definitely more cost efficient to, make more, to mine, and, you're rewarded with more. You're not seeing that now. You're going to see, it's going to be a bit of a, I think a pinch on a lot of these miners. And I don't necessarily see this being as a bullish catalyst to the point where it's going to shoot Bitcoin up, sure, it'll probably go up to 100K or something like that at the top of the next bull run. I see that possibly. But in terms of the short term, just thinking that it's going to go up only, we're in such a fucking terrible place in just the global economy. And if you're shrugging it off, I'm sorry, that's going to fuck you over. And it's so hard when you least expect it, because if you're not preparing now, wait till it actually happens and it's here and you can't fucking borrow any money and you got all these bills and everything's going up in price. It already is, guys. Good luck, but the halving is not going to save your ass. Just is what it is.
Yep. Go start that OnlyFans, I guess, if you want to start saving up some money to buy more Bitcoin, and hopefully Michael Saylor saves our bags and continues to buy.
Come on. There's three assholes in there's a lot of fucking assholes in
I was just gonna say just three.
There's a lot, but there's three that really piss me the fuck off: Michael Saylor, Kathy Wood, and who's the other guy? CZ. I fucking hate that guy too. Justin Sun could be in there too. So there's a lot of assholes. This whole fucking crypto space smells like shit because there's so many assholes. But this is not the place. And Michael Saylor fucking buys the top every single time before it drops. So dude was buying at 69K. So I don't know. I just hate when people think that he's the smartest guy on earth. No, he's gonna be the fucking brokest guy on earth fairly soon. Not true, but we'll see.
That's not true at all.
Not at all.
Sign up for my friend tech. Yes. Value, thank you very much for that. I will go.
Thanks for being here too.
Look, if the app actually ever works, which it's like a 10% chance that thing works at any given moment, but I'll give it the old college try. Okay, that is everything I had from kind of like a macro view. Do you want to get into the charts? I want to look at the dollar, obviously. I want to look at the VIX. I want to look at Bitcoin, ETH, and then anything else that you think is worth discussing today.
Let's fucking do it. Let's get into the dollar, because that one has been kicking ass, and we've been bullish on the dollar for the longest time.
It's one of we just crossed, by the way.
Yeah, I know. It was at 106 earlier today too. It was like super high. Let's see. We were at 106.1. Guys, this white line right here that was acting as resistance, if we closed above it today and we start closing above it, it's a great sign for the dollar being strong. And what does this tell me? This tells me that risk assets, are starting to waver a little bit. People are kind of putting their money behind the dollar. You could say the fucking dollar's dead, that BRICS was going to kill the dollar. The dollar doesn't die in a recession. It fucking does pretty damn well. And if that's where we believe we are or heading into, well, then I think that's a pretty good sign. So for the time being, I'm going to delete this white line. That is, I got rid of the parallel channel
yields real quick. Looking at some of the bond yields backs up that risk asset thought right there, because we see longer duration. People are selling those and taking advantage of the rates that they had, but the shorter duration bonds, the 3-month to 12-month ones, those are being purchased more. And so we see bond traders making that bet that in the short term they would rather have fixed income than higher risk. So just something to keep in mind there as well.
Absolutely. And then if we look here on the daily, we got that golden cross price going up. Sure, it's a lagging indicator, but we can see that the exponential moving averages are a little bit more, they're more in tune with recent price action. So we'll see how this plays out. But obviously we have to hold this 106 or 105.69, which we're well above right now. If we start closing above it, we're probably going to go aim for that 107.16 or 107.193, my bad. And that's not that far away from where we currently are. It's about 1.0 or 1.1 points away from, the current price. Say we get another dip in the market, I think we're going to be taking that out. We're going to have to find support at somewhere where we maybe consolidate, maybe get a bit of a retracement, or we just don't have to, and it could just keep going fucking straight up. It really depends on what the market does, and you do know the situation that would lend itself to it going straight up. Usually that would be a fucking collapse, and we'd get something very similar to what we got up here at around 114. Will we get a double top? That remains to be seen, but the dollar remains strong right now. I have nothing bad to say about the dollar. Let's take a look at the VIX, because this is really interesting, right? Look how much it shot up since, what was this, Friday of last week? Yeah, Friday, September 15th, all the way up to here. I mean, we're right at the 200 moving average on the daily, right? It's a pretty good level. We can see that we're completely overbought on the daily. Let's take a look at the weekly. We're trying to get above this 50 moving average up here. I think that we might get a bit of a correction here. Maybe it goes down a little bit on the daily, but I do think that when this start to pop off, this momentum is going to move a lot slower than it normally would, because I think that there is going to be a lot of momentum behind the VIX. Before the show, I bought some more VIX or UVIX, bought about $1,000 worth, and that's just me betting my putting my money where I think the market will go, and I think it will be volatile for the S&P. Again, I mentioned how the Dow was down nearly 1,000 points earlier today from where it was, about a week ago or so. So I think that, volatility is coming in, and, finding support on this line down here and kind of like consolidating in between it. I don't necessarily think that's a bad way to DCA into the market. And I know that's a weird thing for me to say, because I never DCA. I usually just try and buy the bottom and sell the top completely. But here we are. I'm DCAing for the VIX because I do believe that there is going to be a good opportunity for me to get some exposure on it. Because if this does take off, and we're just take a look at the UVIX real quick. It's at 344 right now, and it's all the way down here. If we do get one of these spikes, I mean, this is the March banking crisis, or this is the banking crisis right here from March. This was inflation going to 10% up here. If we're expecting the absolute economic collapse and we're seeing the volumes tick up here as the price is going down, that's bullish divergence. I honestly believe that we are going to start seeing some massive spikes here, and having some exposure isn't a bad idea. So I don't know if you got into the UVIX yet, JWeb. I did.
I have not yet. If we get a hot inflation reading on Friday, that shit is absolutely going to spike over 20. Like, not $20 for the UVIX, but the actual VIX itself.
If it wants to, be my guest.
If it wants to, yeah, that's great for you. I think, with the data we're going to see, if we see that, the personal income and spending numbers aren't where the Fed wants them, if we see that inflation is hotter than expected, which wouldn't surprise me in the least bit, the VIX is going up, and it's going to move violently.
Oh, yeah, absolutely. And again, when it does move, it fucking moves. Like, here is back in, this is COVID. You can see that you got a nice little gap there in the morning for that week. And then next thing you know, we're all the way up at 85. And that was from like 15 to 85 in a matter of 3 weeks. So that's pretty amazing, especially if we're at values that are, or levels that are pretty similar to where we were prior to COVID. And again, if we look back to 2008, where were the levels? They're, roughly, they're a little bit higher, actually. They're probably in the 20s before we started seeing this shoot up to 89. So we'll have to keep an eye on that. But again, I don't think this is a bad range personally for, DCAing in. Not financial advice. I'm just saying this is for me. I feel safe and with the position, adding that here, because I do think we are going to see some volatility, especially if we do get a government shutdown. That's not going to be fucking good for the markets, I don't believe. But what do I know? Up only from here, from what I hear on Twitter from everyone.
Let's take a look at Bitcoin now.
Let's do it. All right, Bitcoin, the son of a bitch, is back. We had pretty good weekly close last night.
God, there's so much shit on that screen, Kevin.
All right, let's fix it then. Let's get rid of this. Let's get rid of that on the weekly. Let's get rid of. Actually, we kind of need that. Let's just do this. Let's go on the daily. And what do you see? Do you see it yet?
What is that?
That right there, that 100% is, what it is.
Fucking love that drop. All right, we got a death cross on the Bitcoin chart on the daily. Send it lower with haste.
Yeah, well, we'll talk about that in a second here, because there is one thing that kind of scares me with Bitcoin. But we can see that we pumped into the death cross, and now we got rejected from it. It crossed, and now we anticipate that it's going to continue to go down. We have to understand that volumes are decreasing here. I mean, look how low the volumes are from this period to this period. So this
Fucking
is
magnifying glass to see those volumes. Jesus Christ.
I know, from March of 2023, so post banking crisis, all the way down here. No volumes, which again, what does this tell me? This tells me 100% that this entire move was manipulated. And I think we know who to fucking blame for that. Again, I'm not making accusations. That's why I won't say their name. But it's pretty obvious that there is some form of manipulation here when the volumes are that fucking dead from a banking crisis all the way to here. And the price has gone up pretty much up only. We see these massive green market maker candles. So I think that the market doesn't have enough liquidity to hold itself up, mainly based off these volumes. I mean, if you're in a bull market, the volumes are going to be a lot higher, and the volumes were a lot higher when we were seeing the fucking financial world collapse back in March. So that doesn't give me any, indication that we are going to see some bullish price action. However, there are things that I do want to keep in mind. I'm not really going to show too much of the price because I always talk about the levels. We know the levels currently, nothing's changed in that regard, but I do want to show where the liquidation levels are sitting on CoinGlass. So let's just refresh this real quick. And there we are. We're this red line right here in the middle, and we're at 26,276. And we could see that there is actually a ton of liquidity all the way up to about 28,501. And technically, we could actually wipe out all that liquidity and still be within our fourth wave move to the downside on the macro. Sucks to say that, because that means that there'd be a pretty good squeeze here. And that means that a lot of people who are going short, because I think a lot of people really do think that the market, might be going short, might be dropping from here. I mean, granted, we had a pretty good drop over the weekend. I wouldn't be surprised if they just wipe out all these over leveraged shorts, let the liquidity build up back down here, and then we just swipe it down. And it's kind of hard to think that it could drop. It could go within a $4,000 swing from 26 to 28 and down to 24. Yeah, it's a hard thing to imagine, but again, we do know that there is a lot of issues in crypto right now. We saw that Hong Kong kind of is bypassing Binance and HTX, which is also known as Huobi, should be also known as FTX. They're bypassing them for another exchange, right? That's going to be their main exchange in China. And it tells me that there's going to be a lot less market share for some of these big boys. But if any of these big boys drop, they still hold a lot of these assets. So in turn, I think a lot of people would be poised to sell if that comes to fruition, right? I mean, the US is going after Binance with everything it's got. This guy's just throwing up fours. It seems like it's just a matter of time. That's what I'll say. But with this liquidity building up higher, I wouldn't be surprised if we see some type of stablecoin mint. We pump it, wipes out everyone, and then it goes down. But this is just me being, playing devil's advocate, because I don't want people to get too confident in their positions to think that it's going down only. I think the macro is going down, but the short term, it's very possible for this market to fuck everyone over as much as it possibly can. And this is kind of pointing to me that, okay, maybe there is a bit of a squeeze here to some of those levels to just get rid of all the people who are going short to the point where they just don't have that liquidity anymore. So keep an eye on this. I think that's, wiping out at least a good chunk of this would be is really probable. Do we go to 28.5? Maybe. But I think, again, once we taper off down here, maybe around 27.9, 28, there might be less of a chance to go up higher because there would be a lot more liquidity down lower. So we have to keep an eye on that. Be safe, obviously, when it comes to that. Let's see what else we got here. Let's take a look at ETH, because ETH has been another one that has been thrown onto the exchange like crazy lately. I haven't really covered it too much. But you can see that we're in a really weird spot for ETH, right? We're in this kind of bull flag. It should be pumping up here. Maybe it does. Maybe what we just talked about is what pumps the market up. And we do see a bit of a, liquidation level, liquidate a lot of these shorts that are going short a little bit too late and over leveraged. It's very possible. But there's also a good chance that if Bitcoin just pumps, then Bitcoin dominance rises, and then these alt pairs just bleed, and it's possible that ETH just starts taking a dump here. Again, volumes are extremely low. We're only seeing high volumes when it comes to selling, really. You can see right here. These are pretty massive red candles that we're getting. We're not seeing a lot of green volume, which tells me that a lot of people aren't necessarily buying it. We have to keep an eye on that. We do have the death cross. That could be a lagging indicator. We do acknowledge that. But, I mean, we do have our levels of, support down here. I think 1550 was a big one that we got. What was it, Evergrande? We went down even past that, 1531 a few weeks ago before it pumped up again. I mean, if we lose 1531, our next level of support's roughly around 1463. So we have to keep in mind that that's possible too. I just don't necessarily believe that a lot of these altcoins are going to see, if Bitcoin does pump, they're going to see equal gains because the dominance will be so high. And I think a lot of people will be focusing a lot of their money on one asset as opposed to several assets because there's just a lot less liquidity in this market right now.
All right. What else has caught your eye? I'm seeing, stablecoin over the weekend. Stablecoin dominance took another pump back up to about 10.5%. BTC dominance is still hovering right around 50. That's been slowly decreasing a little bit, but I think that'll we're going to see that rise again very shortly. Anything on the TradFi side that is catching your eye? It's kind of a boring day overall. We're back down a little bit on the major indexes, relatively flat for the day. But anything else chart wise before we wrap it up?
Yeah, I'm just gonna go through some more crypto stuff because I got to jump off in a few minutes. Got to go to the doctor, but I can see that for the total market cap, there is a level that I'm really keeping an eye on. Again, this market could pump, and I could be wrong before I'm right, but I think that there's a range between 975 billion and 978 billion that we could tap into, which roughly is right around here. This would be our next level. Let me see if I can put a line in there. Yeah, right there's a good one. Put that there. This yellow line that we just threw in there, I think that's a good level that we could see another drop to. Just based off of weekly support here, we can see there's a lot of good support here. We bounced off here. I think that we are putting in a bit of a bull flag here, or a bear flag, my bad. And we can see that, as the price is rising, we're seeing the drop already. So if this is the beginning of another drop, then likely we're going to see ourselves, sub 1 trillion. We're really holding out to this $1 trillion market cap. But again, we need a lot of money to flow in for us to keep that. But 975 billion is a good level for us to keep an eye on because I think that that is a good enough drop where we see, maybe a little bit more bearish price action in the future, but probably see a bit of a correction before we see that continue. Let's jump over to BNB because I was doing a write-up for Mr. House over the weekend, and I was just looking at historical levels, and I just want to point out some really odd things that I found with Binance. So we saw how much it shot up here back in February 2021. I just want to point out that the height of this move was up to $348. So that's 348. Keep that in mind. And it closed at $210, which is roughly a little bit higher than where we currently are, right? Then we go to the next month. What happened here? Our low was 209.1, which is right below where we currently are, and the height was around 300. So there's a really weird level between this 348 and this 210 where Binance kind of consolidates, and it's 100% because BUSD pumped this market up. I mean, this is not natural how much this shot up from where its value was in January of 2021. It just shot up. But that being said, we've only tested, the lowest we've gone since we closed this month was back here in June of 2022. It was around $183. I mean, we tested back, what month was it? There was 1 month where we tested 186. I think it was right here. We went down to $186, but we never broke below this 183, 184 area. And we tend to close above this 210 level. So we are in the last week of September. The most important thing, I think, for Binance, if we want to keep an eye on this, is closing below this 210.2 level. We're currently underneath it. It's this yellow line right here. If we close underneath that, there's a good chance that we're going to have to test, a little bit lower on the monthly. And again, that would be closing for the first time since the pump back in February of 2021 that we closed below, this close. I don't even know what I'm saying right here. We're closing below the close that pretty much pumped us up into this massive bull market that we got back in 2021. And that's a bearish structure because look at what we have, what level of support we have below that. Maybe this wick right here at 183. That's why I keep saying we have to test that. But if we lose that, then we're arguably on the monthly testing, $44 at some point. That's capitulation somehow. And if you think Binance can collapse and nothing else will, I think Bitcoin's going to shoot up. You're sadly mistaken because I don't see a scenario where that happens. I think a lot of influencers are saying that, but I think this is the thing to watch. This is going to be my number one thing to keep an eye on going into the end of this month. That's this 210.2 level. If we close below that on the monthly, I think I think we're in a place to see some of those lower levels definitely be tested or retested again. Whether they hold or not, your guess is as good as mine. I don't necessarily see a world where people are fucking dying to buy BNB right here, especially with all that's going on, especially if we start seeing Bitcoin's price dump too. So keep an eye on that. If we do see any scam pumps, we know why it doesn't want to close below that, but that is a pretty good sign to me that it's on its way down if we do hit that level come October 1st.
All right. We're going to wrap it up there. I know you got to get going, Kev. We appreciate everybody for watching. If you have not yet, hit that like button down below, subscribe to our channel, comment, share us out on social media, all of that good stuff. We'll be back tomorrow to go through the latest in the market, see if we have anything that we're not expecting or any new news that is coming out. So appreciate everybody for watching. Have a great rest of your day. Stay safe out there. We'll see you next time.
Take care, everyone.